Hello, good afternoon. So we are starting to do some top-down analysis here using MT5 on an Android mobile phone. So I want to clear this chart first. I want to make it clean so that I can start doing our technical analysis. Let me clear it first. So that we can start afresh. So people were asking me, can you use a mobile phone to do technical analysis, or can you use a mobile phone to trade with? And the answer is yes, because your mobile phone is still a computer. Remember, smartphone is a computer that has been incorporated with a mobile phone, that is a smartphone. So this smartphone has a computer in it, and you can use it as a computer. So this is our clean chart. This is a market of Ethereum versus USD versus US dollar. So to start off, I want us first to identify the types of these candlesticks. These green bars and the red bars, they are normally called the candlesticks, and these candlesticks, they just represent the price movement of this asset, this Ethereum in a specific period of time. Let me say this period is 1 week, right? This period is 1 week. When I click on my board, you can see that on our left we have these M5, M15, M30. Sorry, we have M30, H1, H4, D1, W1, MN, right? So M5 simply means 5 minutes, 5 minutes candle, 5 minutes candle. Then M15, 15 minutes candle, M30, 30 minutes candle, H1, 1 hour candle, H4, 4 hour candle, D1, 1 day candle, W1, 1 week candle, M1, 1 month candle, right? So as you see these candles, these red and green candles, let me pick one candle, and I can pick let me say this green candle, right? This green candle. Let me broaden the screen so that you can understand what I'm exactly talking about. So this green candle, you can see that on this side, on our left, we have W1. So this means that this green candle, it took 1 whole week for only this one green candle to form. You get it? It took 1 week for this green candle to form. Then it took another week for this one to form. Then it took another week for this one to form. Then it took another 1 week for this one to form. So from here, let me mark it. From here, right? From this candle that I'm putting this rectangle box here up to here. Let us count how many candlesticks are here. Let us count how many candlesticks are here. Let me say up to here. So you can see that We have how many candles here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You get it? So from here up to here, we had 10 candles, right? So these 10 candles, this means that it took 10 weeks for these candles to form, right? It took 10 weeks because one candle it took 1 week for one candle to form. Yeah, it took 1 week for one candle to form. So as we continue, let me also explain the names of these candles. Each candle has a name, but I'll only pick those ones that I use mostly, right? I only pick those ones that I use mostly. You get it? So let me start with this candle. This we normally call it a bullish candle, right? This is a bullish candle. It is a bullish candle because it shows the price of this asset, the price of Ethereum was was uh, was getting higher, You see, it was getting higher because this candle opened here. I'll explain more things. This candle opened here, and it closed up here. It opened here, this blue cross, then it closed up here, right? So this means that the price was appreciating in that 1 week. So this period, this 1 week, since when this candle opened, this bullish candle, it did what? The price shoot from here up to here, right? And when we try to check the difference in prices, you can find that when the price opened, the price was at when that candle opened, the price was at 1,838.32. When the price closed, when that price closed, it was at the price closed at this price closed at what figure? This price closed at 2,507.99 US dollars. You see, so the price opened at at what yeah, the price opened at 1,831.94, and it closed at 2,507.99. So it means that there was an appreciation in price of Ethereum, right? So that is it. I don't want to complicate things right now because this video I'm doing it basically for beginners, right? Yeah. So let me continue explaining more things. If you want to know more about these candles, you can join my YouTube channel. You can subscribe to it so that you can learn more about these things that I'm explaining, right? You can learn more. So this candle, I've said it is called a bullish candle. You see, it's a bullish candle. Then you have this another candle here, this red candle. This red candle, we normally call it a shooting star candle. You see, a shooting star candle. A shooting star candle is a candle that it opens where the previous candle closed, right? Then the buyers come in, they push the price up to here, the buyers opened came in here, then they pushed the price up to here, then the sellers, they came back to push the price down up to here, up to this area, right? So these are very small, a very small shooting star candle. So this shooting star candle, it simply signifies that this market, the sellers are trying to win, right? The sellers are trying to win, or the price of that asset is trying to get lower. You get it? So when the price is getting lower, this means that it is creating a demand in that market. When the price of an asset gets low, it means that it's creating a demand in that market. So the buyers, the buyers came in, then the price shoot up to here, then it reduced up to here. So before we go on, let me explain the psychology behind the formation of this candle, right? The psychology behind the formation of this candle, or the anatomy of this candlestick. So you can find that when these people open the market here, when the buyers came in here to buy, the price was raised up to here. You get it? The price was raised up to here. Let me mark it so that you can see it clearly. The price was pushed up to there, right? Then the price was then pushed down. The price was then pushed down. The price was pushed down. Was pushed down up to this area, right? At that dot. You get it? At that dot. At this dot. I think you can understand what I'm trying to say. So here was the opening. Here was the opening where that small body is. This small body is, that was the opening. Then the price was pushed up. Then it was pushed again up to here, down up to here. Then the price then was pushed up to that area. So that is a signal that the price could be getting lower very soon. That is a signal that the price of this asset will drop. So it also took 1 week for this candle to form. This candle that I'm talking about took 1 week to form and complete. Then you have this candle, this green candle here. This green candle, it also took 1 week to form, right? So this candle, we normally call it a doji candle. And a doji candle simply means that we had a win-win situation in the market. Buyers were trying to win, sellers were trying to win. So we had a win-win situation. So when the price opened here, the price opened here at the previous closure of the previous candle, the buyers came in, right? Then they pushed this market up to here. They pushed this price up to here. And when you see where the price was pushed up to, let me show you by this tool. When the price was pushed up to here, we can see that it was around 2718.46 US dollar, right? The price was pushed up that area. Then then the price then the sellers reduced the price. The sellers reduced the price, right? Then the price was dropped. The price was dropped. The price was dropped. The price was dropped up to this area. I think you are seeing where my marks are. The price was reduced up to this area. You see, so the price was reduced up to 361.30. You get it, US dollars. Then when this market closed, it closed around here. It closed. The market closed. The market closed around here. Then other buyers came in. That is another week again. That is another week. Then the price was The price here, you can say that this area there was consolidations. We had some consolidations in this area, right? So yeah, we had consolidations, but sellers were the most winners in this period. Sellers were the most winners in this period. So this candle also took 1 week. Also, this doji candle took 1 week to form. So this let me give this example where I'm meaning by a doji candle, right? Let me say you have something like a car, and this car you have bought it maybe at a price of $90,000, right? Then you take it to the market to sell at a price of $2 million, right? Then the buyers come in, they refuse your price. They tell you that if you don't sell us this car at a price of $900, we are not going to buy it, right? So you decided to sell that car at a price that you bought it. That is $900 or $90,000. Let me be specific with some logic. You sell it at a price of $90,000, right? So you have not lost anything because you have recovered the money that you bought that car with. And even the buyers have not lost anything because they have not made any profit from there. So this is now a situation where this kind of a candle forms, this doji candle. Remember, a candle is just something that is representing the price movement of an asset within a specific period of time, right? That is what a candle is. It simply represents the price movement of an asset within a specific period of time. Like in this case scenario, you are using a 1 week candlestick. So this 1 week candlestick, it simply represents the price movement of Ethereum within that 1 week, right? That's where we are getting this doji candle. Let us go on. We have this other candle, this bullish. Now let me explain something that I didn't explain before. So we have this another shooting star. This shooting star, we normally call them the bearish candles, So we have another shooting star here. Also, the market opened here at the closure of the previous candle, then it closed right there. You see. So this is also a shooting star that explains that this market is becoming more and more bearish, right? So we have another doji candle. This is also another doji candle. I've said that if you want to learn more, just get into my channel, into my trading channel, then you'll get more explanation about these stuffs. So we have another doji candle here, then we have a shooting star, then we have this candle. This candle normally let me call it also this we normally call it a spindle bar candle. This is also signifying the dropping market or the dropping price of an asset, right? So at the closure of this spindle bar, we had an opening. We had this opening, which is a bullish candle, this green candle. Remember, a red candle is a bearish candle, then a green candle is a bullish candle. So we have this green candle, which is a bullish candle, and this candle we normally call it a hammer candle. A hammer candle, simply it tells the people in the market that the price of that asset is appreciating very soon, right? So from this candle, we can determine that the price of this asset will get higher very soon. So this is what we normally do. When you see this hammer candle, we normally put an order. So these orders, we normally put an order called at market order. At market order, you come here. You see this box that is written by. You click it. You can click it. You can click it. Then you can see buy. Though here I'm not using my real account because I'm just explaining some concepts here. So when you click buy, you'll find that you'll be already in the trading market, right? You'll be already in the trading market. So I think up to there I've explained something, and the psychology behind the formation of these candles. So let me go along and do some market analysis. Guys, let us not be concentrating on the sounds in the background. Please let us focus on the analysis. So let me try to do some technical analysis here. So let me start by pointing out what we call our area of interest, right? So our area of interest will be things that we normally call demand and supply area, right? Our demand and supply area, we will identify our demand and supply area. Now, how do we identify demand and supply area in this case scenario, right? What I will do, I will mark out the points that I will call one supply and I will call one demand, right? So this is what we normally do when you do market analysis. We normally use these tools here, these objects here, to identify the direction of the market, right? So when I click this arrow, then I come here, up here, then I draw this line, this line like this. You see, this one, this area becomes my demand area. Down here becomes my demand area. Then up here it becomes my supply area. Let me use terms like supply, not let me use terms like support and resistance. So remember, supply is the same as resistance area, and the demand is the same as support area, right? I'm trying to get overwhelmed because I've been doing this thing for a long time. So this is our support area. Don't get confused. This is our support area. You can put your questions in the comment section in the video that I will upload in the YouTube. So how do I identify a support area? A support area, it simply means when the price drops from here up to here, then I get two bullish candles that are following up. You see, these are two red candles, then I have two green candles. So I can, this one qualifies as my support area. So I will mark it. I'll mark my support area. I'll mark my support area like that. Then I have to mark my resistance area. You see, so I mark my resistance area. I mark my resistance area from here up to there. So guys, this is my resistance area. This is my resistance area. That is my resistance. Sorry, this is my resistance area. So what we normally do when you click buy when the price is here, let's say when you click buy when the price is here at my demand area, you click buy. Let's say because we normally buy when the price is in demand. Remember, in forex trading, you normally buy when the price is low and you sell when the price is high. So when you click buy when the price is low here, you click buy, then you sell here, you click sell here, you click sell here. When the price is here, you normally be in the profits, right? You normally be in the profits. So let me continue the analysis. I can just mark another support, another support. This will be my another support. Remember this line, this line that I'm drawing that has arrows, we normally call them the market trend lines. The market trend lines. So market trend lines, they normally show you the direction of the market. Like in this scenario, we are in a downtrend market, because this line that I've drawn from here to here, we normally call it an impulsive move. An impulsive move. After an impulsive move, we normally have a pullback. So a pullback is from here up to here, right? Okay, let me delete it first so that I can explain these things in a more understandable way. In a more understandable way. In a more understandable way. So let me start by drawing our trend lines. So this is an impulsive move. An impulsive move. Then you have this one. This is a pullback. A pullback comes from support to the resistance. This is our resistance, right? This is our resistance. This area is our resistance. So then let me mark my resistance. This is my resistance, and also this is my resistance. This is my resistance, right? That is my resistance. So remember, this was an impulsive move, a pullback. Let me draw another impulsive move. An impulsive move. An impulsive move. This is my impulsive move that is coming up to my support there. This is my support area. Then I have my pullback. This is my pullback. This is my pullback. This is my pullback up to there. So this was my resistance. This was my resistance. This is my support. My support is here. This is my support. This is my support. I can extend it up to there. You can also extend if you want. I can extend it. I can extend it up to there. Remember, guys, in this market, there are things that you can do that are just subjective, right? Yeah, that are just subjective, but you need to have some objective rules when you are doing your market analysis. You need to have some objective rules, but there are things that you can do subjectively. Okay, so yeah, so this is my support. I've drawn it up to there, but I can still draw it. I can still draw it up to there. This is my support. This is my support area. So this is my support area. Remember, this was pullback. Then let me draw another impulsive move. Another impulsive move. This is my impulsive move. This is my impulsive move up to there, up to that area. Let me move this one here. So this is my impulsive move. Then from my impulsive move, I come from there. From that impulsive move, remember that impulsive, this area, this is my support. This is my support. You remember how I told you how I identify a support area? A support area is area the price gets. Then you have more than two red candles which are recovering the price. Two more red candles. Like here we have this 1, 2, 3 green candles. No, two more green candles, two more bullish candles that are getting in. So this is my support area. So we can buy at this area, then we sell here. We buy at the support, then we buy at the support, then we sell at the resistance. Sorry guys, I'm getting more overwhelmed, but let us hope we will get along with this. So let me draw my another resistance that I feel where this is another resistance area because of these red candles. because of that, those red candles. Then I have these pullback. I have my pullback up to there, right? I have my pullback up to there. So there's something I want to explain here. We have our resistance area here. So let me draw another pullback. This is my pullback. Remember, a pullback comes from the resistance up to the support. That is a pullback. Then an impulsive move, it starts from a support area going to the resistance, right? So let me draw my impulsive move. So this is my impulsive move, right guys? This is my impulsive move. You get it? So there's something that has happened here. Guys. You can remember what I told you about the resistance and the support, right? So if this is my resistance, right, and this is my resistance, I can still extend this is my resistance in this manner, right? In this manner, so that here we have a resistance, here we have a resistance. And what normally happen in this market, we have something we call the break of market structure, or we call it market structure shift. So this market has broken this resistance, right? Has broken this resistance. And when the market breaks the resistance line, it normally do something we call a retest. You see, the market will normally do something called a retest. Let me extend this line up to there. So this retest, it normally shows that the trend is changing, right? The trend of that market is changing. Like from here up to here, let me draw it. Let me draw so that you can understand me very well. Guys, from here, from this resistance up to this support, right? Up to this support, we can say that the market was in downtrend, or the market was downtrending. From here up to here, the market was downtrending, or was in the downtrend, right? But from here up to here, from this support, up to this resistance, we can say that the market was in the uptrend. The market was in the uptrend, right? So we have an uptrend market and a downtrend market. This is a downtrend market. Then this is an uptrend market. So when the market breaks the resistance, it normally comes back to retest that previous resistance, whereby that previous resistance, it becomes now the support. You get it? And this area where the market has broken, this area here, we normally call it a fair value gap. Get it? So this fair value gap, this is a gap that the market has to fill it. We have people who trade the smart money concepts, and we have people who trade the inner circle traders concepts, and we have people who trade the price action. What I'm trying to explain here, these are concept called price action, right? These are price action concept. So when this fair value gap, the market comes back to retest it, we normally get some area of interest. And this area of interest, which is a demand area or a support area, we normally press buy button, right? We normally press buy button. When you press buy button, when the price is here, we normally get some opportunities. We normally make some profits, right? So let us continue. So when this market has broken up to here, it will eventually drop and retest. But within the market structure, we also have some other structures that are forming. I don't want to go there because I confuse you people. So let us go on with the technical analysis. So this market, it dropped up to, from this resistance area, it dropped up to here, right? So I can say that this is my pullback. This was our impulsive move, and this is my pullback, right? This is my pullback. This is my pullback up to there, because my pullback has gotten up to there because I have these two green candles. So those two green candles will form for me a pullback, This was my impulsive move, then a pullback. Impulsive move, a pullback. So we have come from, we were in a downtrend, we went into an uptrend, then we are back in a downtrend. You can see how these things are so interesting. You see, these things look so interesting. So we are back again in the downtrend, right? So let us go on and identify our areas of interest. So this is our impulsive move. This is our impulsive move again. Remember, our impulsive move has bounced back, is bouncing, has reached has hit our previous resistance. This resistance line, you get it, has hit our previous resistance line. So this is our resistance line. We can call it here a support line. We can call it our support line. So this resistance area, our previous resistance area, because I've extended it up to here, it has become our support. So this our support has prevented the price to break it. The price is again bouncing back. You get it? The price is again bouncing back. You get it, guys? So let me continue with the technical analysis. So since this is our impulsive move, let us get our pullback. Let us get our pullback. So this is our pullback. This is our pullback. You see this? Let me pose a question. Let me ask a question here. So I told you that we have some names of these candles, like this candle. If you know the name of this candle, you can comment it in the comment section, guys. You see the name of this candle, right? This green candle that I'm pointing, you can comment it for me. But I say that this candle, it signifies that our price is falling very soon. Our price is falling very soon. The price of this Ethereum is falling very soon. This is the signal that we are getting to identify with. You get? So let me continue and get our pullback. Let me continue and get our pullback. So this is our pullback. Then from that pullback, we have some resistance. Resistance. Why do we have some resistance in this area when the market was supposed to trend upside? Why do we have this resistance, guys? You can still comment in the comment section. So here we have an area of interest again. We have an area of interest again. This is our support. You get it, guys? So this support area was broken by these three red candles. Therefore, I mean by these four red candles. So when this support line was broken, it created in this area what we call a fair value gap. You get it? Yeah, you can call it a fair value gap, or you can just call it a break and retest. Anyway, so this is our break and retest, right? So this price, when it got here, it got rejected. It got rejected. It got rejected because of this support line. So this support line, it has again acted as a resistance. You see, this support line has again acted as a resistance line. So when the price started from here up to here, the price got up to this support line, then it was rejected back up to this area again. You see, yeah, I don't want to confuse you guys, but let me explain in this concept in a very simplistic manner. So the price was here, down here, then it got here, it hit the support, then it was rejected. So our previous support line has now become the resistance, right? So this is the resistance. This resistance now has made the price to drop, from there up to this area again, up to our previous support, right? Our previous support. So when the price has gotten into our previous support, it has again been rejected. Remember, this is a game of this is a psychological game. Trading is a psychological game. You have some people who just feel like the price should not get past there, then they pull it back up. And you have those that feel that the price should not pass past here, then they drop it down. So this is our support. Then we have a pullback, our pullback. There's no interesting game to play like trying to do some technical analysis. So let us have our pullback. Our pullback is here. This is our pullback. Again, it is back to our resistance. It is back to our resistance, guys. So from our resistance, we can still see the rejection from that resistance. You can still see the rejection. So this rejection is again pushing the price down, guys, my people, my family. It's again dropping this price up to this area, So let me ask a simple question. Do you feel like this price should go up, or it should go further down? Because here we have our support. Here we have our support, and this support will act as a resistance to that price, so that this price will be forced to go up again, or the market participants will continue selling this asset, which will make this support line to be broken. When it has been broken, we will have a retest of that support line. Then that retest will now be our resistance, right? Will be now our resistance. So up to there, I think some concepts are trying to sink in our heads. So guys, I've told you that trading is a very interesting endeavor, right? So I extend this this previous resistance line, which now became a support here, then it was broken. Then the market participants failed to retest it, failed to get up to it. But remember, we have our support. Here. You have another support line here, guys. You have another support line here. You have another support line there. That is our support line, because the market was rejected at this point. Then when the price got in this support line, it now become a resistance line. Our previous support guys turned out to be a what? To be a resistance in this area. These drawing tools, you can just find it in this space. In this space. Somehow what we can do, we can still mark out this point. Mark some points here. You can still mark some points here. Mark some points here. Still mark some points here. Can still mark some points here. This is also our support. This is also our support area. So we should get the price here, which will be resisted maybe. So maybe somehow we can get some price. Sorry. We can get some price getting this area, getting in this area up to there, which should be rejected. Then it drops a bit. It drops a bit after the rejection. After the rejection, then it again comes to break that resistance area. It again breaks that resistance area from here. So it comes it comes to break. Let me get it right. It breaks that area. Maybe it gets up to here. Guys, you can see the price can get up to here, which is a valid area. It can get up to there, which is a valid area. Remember, this is our previous area of resistance. Because of this area here, it was a support, here was a resistance. So this is can become our resistance again. Then maybe it drops, and maybe it drops to come and retest maybe up to this area. Up to that area, it will test this previous resistance. Now this one will become our support. If it drops up to here, it will become our support. Then from there, it will do what? It will bounce up again. It will bounce up again. See, it will bounce up again up to maybe that area. So up to there, you can ask me questions in the comment section where you don't get it right, so that we can clarify in our next video. But from this point, I think I've explained things to do with the support and resistance, demand and supply. Remember, demand and supply, support and resistance are just the same things that I'm talking about, right? So what have I not marked? What have I not talked about? Yeah, simply I don't want to confuse you with more things that are so complicated. I think what I can only say is that we buy at the support area and we sell at the resistance area. Like here, I can sell here. I can press sell button here, sell button at this area. Then I can buy at this support area. But remember, we have some technical technical factors that we put into consideration before we press buy or sell. You get it? You can also ask me in the comment section which technical factors you put into consideration before you press buy or sell. So I think this video has been so long, and I don't want to explain more than that, right? So this was a market of Ethereum versus the US dollar. So one thing I want to explain as I leave, you have these figures in this area, on my right. These we normally call them the exchange rates, right? These are the exchange rates, guys. And these exchange rates, they normally do what? They normally show us where the price of an asset is currently. You get it? So like right now, I can figure where I can figure out where the price is right now. You see this green area, this green line here. This is where the price of Ethereum is right now. The price is now at 1,582.71, and you can see that you have some figures also that are changing down here. So these figures are normally showing me that we are remaining with 9 hours, 2 minutes, and 14 seconds for this candle to complete forming. This candle that I'm pointing here, we are remaining with that period, guys. So the price is currently here. So my anticipation is that this market, when it has completed forming this candle, because we have our what? We have our support area here. Because we have our support area here, because we have our support area here, this price, maybe it will not go past this line, right? Maybe this price will not go past, sorry, this price. Let me draw another pointer. Maybe this price that is here, it will not go past this area, past this line, right? So let us please stop there, and I welcome the questions.